SK Hynix is about to test just how crazy the AI boom really is, with one of the largest AI-linked stock listings the market has ever seen, and most investors are not paying attention to what this actually means for AI chips, memory prices, and your portfolio. Welcome back to AI Assets. Today we're breaking down SK Hynix's massive US listing, why it matters for AI, and how you should think about this if you're investing in the AI supply chain. SK Hynix is one of the world's leading memory chip makers and a critical supplier of high-bandwidth memory to Nvidia and other AI players. Now they're planning to raise around $28 billion through a Nasdaq listing to supercharge their AI chip production and build advanced new fabs in the US and beyond. This isn't just another IPO headline. It's a signal that the AI race is entering a new, much more capital-intensive phase. In this video, we'll first break down what SK Hynix is actually doing and why. Then we'll zoom out and look at the investor context, which sectors and stocks are directly in the blast zone of this move. After that, we'll talk about what the market might be missing, the risk patterns and second-order effects that don't fit in a standard news article. And finally, we'll look at what happens next and how smart investors can position themselves before the next wave of AI capex hits. Let's start with the basics. SK Hynix is already a giant in memory chips, especially DRAM and HBM, high-bandwidth memory. If you've heard about Nvidia's GPUs needing HBM stacks to push AI workloads, SK Hynix is one of the key names in that ecosystem. The company has been ramping investments in AI-focused memory capacity for years, but this step takes it to another level. By going for a roughly $28 billion US listing, SK Hynix is doing three things at once. First, they're tapping deep US capital markets to fund long-term AI investments without overloading their balance sheet in Korea. Second, they're cementing their visibility among US and global institutional investors, many of whom still think mostly about Nvidia, AMD, and maybe a couple of cloud hyperscalers when they hear AI. Third, they're sending a political and strategic signal. The AI memory race is global, and they intend to be at the center of it. The capital raised is earmarked for expanding AI chip production capacity and building advanced fabs. Think more HBM lines, more DRAM tailored to data centers, and more advanced packaging capacity to support complex AI architectures. This is not speculative expansion into random markets. This is tightly linked to the AI spend coming from big tech and cloud providers. So why does this matter for you as an investor right now? First, this deepens the picks and shovels story of AI. The first wave of AI investing focused heavily on front-end names like Nvidia and the obvious cloud beneficiaries. What SK Hynix is doing highlights that memory, packaging, and broader semiconductor infrastructure are just as critical. That means the AI trade is not just about GPUs. It's about the entire stack: logic, memory, interconnect, power, and cooling. Second, it has direct implications for the semiconductor sector. When a major player raises tens of billions to expand capacity, it changes the medium-term supply and pricing outlook. In the short run, this supports the narrative that AI demand is strong enough to justify mega capex. In the longer run, it raises the risk that memory markets, which are famously cyclical, could eventually swing from tight to oversupplied once these fabs start pumping out product. Third, it impacts regional positioning. A large US listing by a Korean champion plugs SK Hynix more deeply into Western capital pools, while at the same time anchoring capacity in Asia. For investors, that means the AI memory story is diversifying geographically, and you're likely to see capital flow not just into US names, but into global semiconductor leaders. Now let's talk about what the market might be missing. The obvious narrative is huge listing, AI demand strong, bullish for SK, Hynix, and AI chips. That's the headline. But beneath that, there are a few non-obvious angles. One, by raising this much capital, SK Hynix is effectively committing to an AI supercycle lasting many years. If AI demand stays strong, they'll be positioned as a key winner with scale, customer relationships, and high-end technology. But if AI spending slows or normalizes faster than expected, this level of capex can turn into a drag, compressing margins and increasing volatility in earnings. That asymmetry is something many investors underestimate when they only see the growth side. 2. This move raises the bar for competitors. Samsung, Micron, and potentially other memory players can't just sit on their hands. If SK Hynix locks in big AI memory contracts and capacity, rivals may feel forced to respond with their own capex splurges. That could set up a future where the entire memory sector has overbuilt capacity in anticipation of AI demand that might or might not materialize at current hype levels. In other words, today's AI capex race can become tomorrow's margin squeeze. 3. There's a risk and an opportunity around valuation. If the listing is heavily oversubscribed and trades strongly, it could further inflate AI-related multiples across the memory and semiconductor space. That's great for holders in the short run, but it also raises the risk of a sentiment reversal if any of the big AI buyers guide lower on spending. On the flip side, if the listing underperforms or markets balk at the size, you could see a temporary reset that creates better entry points for long-term investors. So what happens next? And what should you watch? First, the timeline of the listing itself. Key dates around pricing, first trading day, and early trading dynamics will matter. Watch how the market absorbs the new supply. Are we seeing strong demand from US institutions, or does the stock struggle to find its level? That first month of trading can set the tone for how investors view not just SK Hynix, but AI memory as a whole. Second, pay close attention to capex guidance from other semiconductor names over the next few quarters. If Micron, Samsung, or foundries like TSMC start echoing similar mega capex plans, that's a sign the industry is collectively betting on a very long AI boom. That can be bullish for equipment makers and infrastructure plays, but it also raises the probability of a classic semiconductor cycle down the line. Third, listen carefully to what the big AI buyers say. When Nvidia, the major cloud providers, and hyperscalers report earnings and give their outlooks, they'll often hint at how sustainable their AI spending plans are. If they keep talking about multi-year, multi-hundred billion dollar capex, that supports the SK Hynix story. If the language becomes more cautious, that's your early warning that the AI supply chain might be getting ahead of itself. As a retail or institutional investor, you don't have to chase every AI headline. Instead, think in layers. At the top, you have the obvious winners, GPU and accelerator names. In the middle, you have memory and packaging, where SK Hynix sits. Below that, you have equipment makers, materials, and power infrastructure. When a company like SK Hynix raises $28 billion, it sends ripples through all of these layers. So how could you position? One approach is to treat this as confirmation that the AI supply chain is still early in its build-out phase. That can justify selective exposure to high-quality semiconductor names, especially those with strong balance sheets and clear AI leverage. Another approach is to be more contrarian. Recognize that every cycle ends and begin tracking which companies might be overbuilding relative to realistic demand. That doesn't mean shorting today, but it does mean building a watch list for when sentiment flips. Either way, this listing is not just a Korean story or a single stock event. It's a test of how much capital markets are willing to fund the AI build-out and how far investors are ready to go in backing the memory side of the AI equation. If you found this breakdown helpful, make sure you subscribe to AI Assets for daily insights on AI investing, from front-end names like GPUs and cloud to the deeper layers of memory, infrastructure, and semiconductors. Let me know in the comments, do you see this massive SK Hynix listing as a sign of sustainable AI demand or as the first hint of future overcapacity? Thanks for watching. See you tomorrow.